The period end, or for that matter, annual financial closing process, call for a lot of estimations and adjustments pertaining to assets, liabilities, incomes, as well as expenditure. Accounting for prepaid expenditure is an indispensable part of the periodic and annual financial closing process. While for some enterprises, this is a small segment in the whole bucket list of activities, yet for some, it is a voluminous, tedious, and time consuming process. Services may be invoiced in advance or in arrears, while the latter gets ingested in the expense provisioning process, or what we call as the purchase order accrual process in SAP S4HANA as of 1809. The former gives rise to accounting for prepaid expenditure, which is manually managed in most enterprises. SAP's accrual engine functionality in SAP Enterprise Central Component and SAP S4 HANA versions is generally used to manage such prepaid expenditures and their periodic amortizations. When we talk of the four stage gates or the four steps in the whole process, they are as follows. Step 1. Book the entire amount as an expenditure through service entry sheet against a valid purchase order. Step 2. Determine the prepaid amount and transfer the same out of the expenditure account and post it to the accrual asset account, that is, your prepaid account. Step 3. Creation of accrual objects within financial accounting using the SAP's accrual engine functionality. Finally, in step 4, post periodic run of the amortization amounts. Among the above steps, step 2 and step 4 are the most tedious and cumbersome and are generally manual in all enterprises. Our innovations team offers all SAP customers a plug and play add-in which automates the entire exercise of determining the prepaid amount, creation of the accrual objects, automatic termination of the objects in case of revocation of the service entry sheet, etc. Well, here is how we do it. Let us first create a purchase order with reference to an existing purchase order. We press the create icon and refer an existing purchase order. And create a new purchase order. In the services line item, we put one quantity and we put the price as 13,000 Indian rupee and save the purchase order. In the next step, we go to create service entry sheet for the purchase order and create a service entry sheet for the same. This would record the expenses in our books of accounts. Please note that we are taking a period from February 2020 to February 2021, which is effectively 13 months. We put the posting date as of 29th of February. Select the services. Adopt them, and there you go. We save the service entry sheet, and then we release it for accounting. Now let's go back to our purchase order and see the accounting documents which the service entry sheet has created. There is the material document for the whole amount of expenses of 13,000. Now if you go to document info and check for FI documents, you get your accounting document. Now here is the automation. If you see here, the system has split the accounting entry into prepaid and expenditure components. 12 months from March 2020 to February 2021 is prepaid, and only 1 month is that of expenditure. So 13,000 has been effectively split into 12,000 and 1,000. This is the automation that the system has done. Now if we also go and check the accrual objects, we can see that the system has created an accrual object also for the prepaid expense. If you see the accrual object number, it is the same number as that of a service entry sheet. And if you check the text, it is referencing the purchase order and the line item. You can also see the start of life is from March 2020 and the end of life is on February 2021. The account assignments have all been copied from the purchase order. Also, you can see the periodic proposed amortization amounts starting from March and going into the future. So in this way, we have taken care of step 2 and step 3 of transferring the prepaid amount as well as creating the accrual object all in one go. Now you can run your periodic amortizations from the regular accrual object periodic processing transactions. Now what happens if you revoke this service entry sheet? We save the revocation on the same date as that of which it was posted. And we go back and check the accrual object. If you refresh the data, you can see all the future proposed amortizations are revoked. All the proposed postings are gone and the system has reversed the proposed amortizations. The system has terminated the accrual object as soon as we revoked the service entry sheet. So we have taken care of both the forward process as well as the reversal process in the same solution. So we have made prepaid accounting simple and seamlessly automated and integrated process. To know more and to request a demo or a free trial, you can always call us or write to us at our contact details given here in below. Thank you for your time.